Welcome to Illuminati Silver. We tell the truth about silver. Today is Wednesday the 3rd of June 2020, and yesterday we published a video entitled Gold and Silver Falls as Bank Stimulus Boosts Equities. And on Tuesday, silver falls back as equities rise. Is this just consolidation? Now, during these, we proffered our analysis that we can expect silver for the time being to vacillate between $17.50 and $18.50 for a short while, with $17 acting as a very strong support, but not necessarily impregnable support, and $19 acting as an extremely strong resistance level, with $18.50 being really the main resistance level before any approach could be made towards $19. Well, so far today, and by the way, the time is currently 19:30 GMT plus 1, gold stands at the same level it did when we produced our last video, that was yesterday's, and is currently $1,719, having been no higher than $2 higher, $1,721, and no lower than $1,697. So it did dip below that 1700 mark, albeit for a short time. Silver is currently $17.87, which has been its high for the day, or certainly within the past 24 hours. But it's also been as low as $17.49. Notice that $17.50 floor we mentioned. Now, both precious metals have moved exactly really as anticipated, and so far predicted. Now, a few hours ago, Bloomberg published an article on today's jobs figures. By this, we mean the weekly jobless claims report. So let's take a brief look at what Bloomberg had to say. Bloomberg article dated June 4th, 2020. Headline: US jobless claims slow, while underscoring persistent weakness. As businesses reopening picked up nationwide, Americans filed nearly 2 million applications for unemployment benefits last week, reflecting a slowing, though far from a halt, in job losses. Initial jobless claims for regular state programs totaled 1.88 million in the week ended 30th of May, Labour Department figures showed. Thursday, down from 2.13 million the prior week. It was the first reading below 2 million since the coronavirus-related layoffs began en masse in mid-March. The median estimate in a Bloomberg survey of economists called for 1.83 million claims in the latest week. Continuing claims, the total number of Americans claiming unemployment benefits increased to 21.5 million in state programs the week ended May 23rd, compared with analysts' estimates for a decline. Most states reported declines from the prior week, and the latest increase in part reflects quirks from bi-weekly filing rules in California, which showed an unadjusted rise of about 618,000. US stocks fell at the open. Separate data Thursday showed US trade in goods and services plunged in April to the lowest level in almost a decade. The 4-week moving average of continuing claims fell to 22.4 million from 22.7 million, the first decline of the pandemic. In the week ending May 30th, 36 states reported 623,073 initial claims for pandemic unemployment assistance, the federal program that extends unemployment benefits to those not typically eligible like the self-employed. That was less than half the prior week's count. Thursday's report underscores the current dichotomy in the labour market. The layoffs are continuing and hitting the higher wage workers and supervisors that escaped the initial wave of layoffs. But at the same time, a multitude of Americans have headed back to work, with varying degrees of business restrictions being eased in all 50 states. The initial claims figure remains enormous at about 9 times the pre-pandemic weekly average, but weeks of decreasing initial claims suggest the worst of the coronavirus-related layoffs is over. Even so, lingering effects from forced business closures and the pandemic itself will likely weigh on any recovery in the labour market for some time. The May jobs report out Friday is forecast to show employers cut payrolls by 8 million, sending the unemployment rate soaring to Great Depression-like levels at 19.5%. It will also show the distribution of job losses across industries. The reference week for the report is in mid-May, so last week's jobless claims may reflect job losses not captured in the monthly employment report. California and Florida both saw increases of more than 27,000 in initial claims filed last week. Mississippi was the only other state to show a rise, though minuscule. States seeing significant jumps in continuing claims in the week ending May 23rd also included Texas, Pennsylvania, Oregon and Florida. Georgia, one of the first states to reopen, saw its benefit rolls grow by 19,156 to 750,918. Given the unprecedented surge of claims in recent months, many economists look to the non-seasonally adjusted figures for a more accurate read on claims. The total reported number under the federal PUA and state programs was 2.23 million last week, down from 3.21 million in the prior week. Many states that have already accepted tens of thousands of claims for the federal assistance are still showing zero claims on the national report. End of article. As we can see, the jobs position is not great, but it is showing some signs of improvement. At least the scale of the claims are starting to reduce. Now, productivity revision for quarter one has come in at minus 0.9%, compared with the previous month's figure of minus 2.5%. Now, yesterday's ADP report, which tends to give us an insight into what's going to happen in the non-farm payrolls, was much better than the previous months, with the May figure showing minus 2.76 million compared with April's humongous minus 19.6 million. Now, naturally, analysts are expecting a relatively favourable non-farm payrolls report, which will be announced tomorrow, together with the unemployment rate plus average hourly earnings, not forgetting, of course, the consumer credit figures for April, which are also being announced. Now, the European Central Bank has announced today that it has made a much larger provision for the crisis than many anticipated. And we touched on this briefly yesterday, and we shall cover this in much greater depth in a video that we shall publish tomorrow. Now, it's quite possible we may very well publish 2 videos tomorrow, and this will be the first one, which we shall publish by midday. That's GMT plus 1, and then the second one closer towards the late afternoon, early evening. Now, Asian markets closed overnight, generally up around 0.3%, while European markets are virtually all down, ranging from minus 0.21% to minus 0.64% for the FTSE index. Now, the Dow Jones appears to be constantly moving in and out of positive territory, and is currently, a little before the close, just 3 points up, while the S&P and Nasdaq are down 8 points and 45 points respectively. Of course, by the time this is published, that may have changed. Now, oil is up just over 20 cents a barrel, but this has now caused Brent crude to hit that recently elusive $40 a barrel mark, which will be quite interesting to note. Now, the dollar index has weakened further, and regular listeners to this channel will have noted that we stated just over a week ago that to watch out should the dollar fall below the 97 threshold. Now, we were saying this when it was hovering between the 99 and 100, and it's currently 96.61, so that's down 0.66 on the day. Now, depending what happens tomorrow, this could prove to be quite significant. Having said that, it may very well just flip back up above that 97, but 97 is, for many reasons, and particularly from our analysis, quite an important figure. We'll say more on that should we find that the price breaches below that a little further over either tomorrow or early next week. Otherwise, it's just a natural movement and will recover a little back up to the 98 level is our forecast. However, if it stays below 97 for a couple of days, we could actually then see it fall to 95 quite quickly. Now, what is disappointing for gold and silver investors, obviously, is that this weaker dollar has provided us with little movement in gold and silver prices. And so that will no doubt sort of upset some and prove to be an opportunity for others who wish to strengthen their holding in gold and silver. But it's also provided little movement in equities as well. Now, there are reasons for this, and we suspect that the markets are waiting for tomorrow's data to be announced. But we're also told, but not confirmed yet, there may be some more geopolitical information being announced tomorrow, which may, shall we say, affect the markets. Now, we'll cover this again tomorrow if our information source confirms what has initially been reported to us. It's difficult to say more than that, because otherwise we could be accused of potentially making something up, which we don't wish to do on this channel. So until tomorrow, have a most pleasant evening. Thank you for listening. Please share your thoughts. And if you haven't already done so, do subscribe to this channel and press the bell sign so that you're notified of our videos as and when they're published. Now, over on our Richard and Greg channel, we shall also be placing a video on that one tomorrow as well. We haven't done one for a few days, primarily because we've been talking about the same subject for some time, and producing a similar video every few days does actually become quite boring. So we will be doing an update tomorrow, and then we should be moving to new subjects on that channel very soon indeed. So until tomorrow. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.